Welcome, everybody. This is Disruption Talks. It's 10 a.m. Central Eastern Time, and we are running yet another episode where we invite top experts to discuss digital acceleration, winning strategies, innovation, and scaling products. And if I may say, the topic of today's lesson is as easy as API, not as easy as pie, of course, a little geeky wordplay here. So you might have read sometime in 2020 the article in the podcast by the AZ16 Anderson Horowitz Fund, how every company will have to be a fintech company. And our guest of today, Lars from Weavr.io, will be bringing us closer to that notion because basically, Lars, what you have in store is building blocks that would allow me to implement and have financial elements, building blocks in an app that might not necessarily be intended to be a fintech app to begin with, but hey, my users want payments, so I need a Weavr.io, right?
Exactly. Hi, Philip. Yeah, exactly. That's what we're doing at Weavr. I'm excited to be here on the show and chat with you about embedded banking and everything else.
It's our pleasure. But usually, before we dive into speaking all the great things about the company, we start with speaking great things about the guest speaker. So, of course, I've gone through your LinkedIn, I've read some articles, but let's make sure that the audience has an identical level of knowledge. So, if you could give us the elevator pitch of Lars, how you got to Weavr.io. I've seen you've studied internationally. So, I'm curious to hear the rundown of you before we start talking about the company.
Sure. Happy to do that. Yeah, hey everybody, my name is Lars. I'm based in Berlin in Germany. I work in fintech since around 2013, 2014. For me, my background, I studied actually traditional finance in Frankfurt. I always thought I'm going to work in a bank. It was back in the days, I think 2009, 2010. Luckily, I was seeing the first trends of, the current fintech wave that we're seeing today picking up back in the days. So I got involved with SumUp as an intern and kind of saw that something is happening. When I then studied my master's program internationally, when I got back to Germany, I think in 2013, I got involved with a company called Figo, which is an open banking company. And that was basically my first job in the fintech space. Figo back in the days was a B2C banking app provider. So probably everybody knows it, kind of aggregate all your bank accounts into one single banking app. That's what Figo wanted to do. Unfortunately, or maybe fortunately, it didn't really work out for the company. So at that point of time, it was pivoting from a B2C approach to B2B. And open banking, PSD2, all these kind of things were not really known back in the days, but we or the founder had seen initial interest from other companies connecting to existing bank accounts. So I joined the company in 2014. So me and the founder were basically starting this venture focus on the API space, stayed with the company for roughly 5 years. At Figo, I focused completely on non-banks. So we had our customers in the banking segment, including like Deutsche Bank, Commerzbank, were customers of ours at one point. But my focus were completely on fintech, startup, technology companies, everybody who doesn't have a bank license but wants to connect to bank account. And that was basically, it was open banking, but that was the first time I kind of saw that something like embedded finance, embedded banking is happening, that companies who are not banks themselves, who are not financial companies themselves, have a deep interest in connecting to bank accounts. One example, for example, was a startup here in Germany or here from Berlin in the property management space, I think called Home HD. They wanted to connect to bank accounts to inform their landlords when their own tenants have paid the rent. And that's why I realized like a bank would never build a solution for landlords because there's no specific bank for landlords in Germany. Everybody has a landlord as customer, but no bank has like sufficient number of landlord as customers to actually build a solution for them. But these guys were only focusing on landlords and they built a solution based on open banking. And yeah, to finish maybe my background, 2019, I left Figo initially with the idea to start a venture of my own, which didn't really work out as so often in the space. It didn't really work out as my co-founder. I switched into a freelancing role, was working with a couple of fintech startups, mostly here in Germany, but also abroad, helping them to build their first MVP, go-to-market strategy, things around that. And I was eagerly looking for the next thing. And as you mentioned as well, 2020 was a year where everybody spoke or written about embedded banking, embedded finance. I was actually working with a few startups and was helping them to integrate with that, let's say, traditional banking as a service providers. And that's when I realized, like, if embedded banking, embedded finance is really happening, then we need other companies than traditional banking as a service company. Not like that traditional banking as a service companies are doing something wrong or don't have their place. They definitely have their place and they will be majorly successful. But what I realized is if a really a non-bank, non-fintech company wants to offer financial services, they need a provider that is really targeted their needs. And that's basically obviously what Weavr is doing. And when I learned about Weavr, got to know the team last year, I was very eager to join them after we closed the seed round in October last year. And yeah, now here we are.
I mean, the truer words could not be spoken. You don't want to apply for the license if you want to provide banking services, and also as a bank, you're going to be too legacy to even consider things like you mentioned, so services that are surrounding a focus for a specific group of needs, really. I would be curious to see, for example, such a solution with the leniency that we have on credit scores, with buy now, pay later, those proprietary systems of evaluating how trustworthy you are of giving you some money for a specific set of time. For example, with artists. And how would you establish a credit score for artists who have the most unstable source of income, where sometimes it could be 3 concerts in the summer and that's an annual salary, but then 3 months of no shows, right? So I'm really curious to see how far we can go with trust dressed up in some machine learning and data science,
sure.
essentially.
Another example I have there, actually, as part of Weavr, I spoke to a company, I forgot where they're from, somewhere in Europe, and they have built a platform for cleaning companies, not individuals like individual cleaners, house cleaners, but proper cleaning companies. And they were basically using this platform to find new contracts and offices and bigger properties and these kind of things. And when I spoke to the founder, they were not at the stage yet to embed banking, but he was very clearly saying, nobody understands my customer as good as I am. And to be honest, what he was saying, banks don't really like my customers as well, because they're typically not the easy type of customers. But I know how I know them very well, and I can offer them very, very targeted the right financial products. And they were definitely, I think by the end of this year, they wanted to embark on their embedded banking journey. And this may be similar comparison to an artist as well. A very specific customer group. If you don't understand them, don't know how they work, then it might be really, really hard to offer the right products. But obviously, if you do, then it's a great opportunity.
And even sometimes the driver or the push factor is not from the bank. I know the case of Uber. It also was a 2020 podcast with the CEO, Dara Khosrowshahi, how they were strongly considering, but they just had to delay it, not that they canceled it, developing a lot of financial features for Uber drivers, such as advance on your payments, such as helping you purchase a vehicle, all of those things that still make sure that they're not considered employees. But, as Uber, the more drivers I have, the more demand I can cover. If I can help my drivers be drivers, then I'm not interested in being a bank, but whatever the tool is, it's that has to do with fintech. Sure, let's just add it to the stack. So, like I'm saying, it's not even going to be about banking ambitions or let's do payments. It's just a necessary means to an end.
Exactly.
So, still about you, but slightly transitioning into Weavr. What do you do over at Weavr as the banking lead?
Of course. Me as a banking lead, maybe for the first letter, like what is Weavr really doing? As mentioned before, we are focusing on companies, like you mentioned, the A16, like the Andreessen Horowitz article, every company should become a fintech or will become a fintech. Obviously that we are empowering. So our customers come from various industries and they use our APIs or our building blocks to embed financial products into their offering. So this is really, really what we're doing. So in a broader concept, it's banking as a service, but it's really, really thought and focused on customers who don't want to build big fintech teams. So we always see the comparison it's maybe a very, let's say, very extreme way, but a traditional banking as a service company might focus on challenger banks, might empower new completely teams that want to build better banks. Our focus is not so much on companies that want to build better banks, but who have existing businesses and want to integrate the banks into their offering. And what we have done at Weavr, I think, which is obviously very, very different to traditional banking as a service companies, is that we want to make the journey for the innovators, that's how we call our customers, as easy as possible. And they don't have to deal with compliance, regulatory, and so on. Because something that gets often very, very much forgotten is when you're working with a with many banking as a service companies, even though you don't need to bring your own license to them because they have a license, you still have so many things to do, so many things to figure out, from AML to KYC to transaction monitoring. So many buzzwords are there that you have to figure out. And if you're a company who comes maybe from you're focusing on cleaning companies, obviously you don't know anything about that, and you don't want to hire 3 to 4 people who figure all of that for you out. You want to have a provider who takes care of that. And basically our technology enables us to take care of these things, so our customers can really focus on the product. But what I also need to mention, obviously, there's a fine line between these two things, right? Like between a banking as a service company and maybe an embedded banking provider. That's how we describe ourselves. And yeah, I mean, as you think that you asked as well, like my role at Weavr, I'm the banking lead at Weavr. So Weavr is designed in a way that we work with different banks in the background together to actually provide our services. So it's not just like one license; it's actually multiple licenses that we work with under. And basically, in my role, I manage the relationship, but also scout and integrate the additional banking providers depending on the needs and further development of our product.
And you started with the line that this is for companies that don't necessarily want to be fintech companies, that they don't want to build custom solutions. They rather want to take something off the shelf, plug it in, and it works. Is there a ceiling to Weavr.io customer persona? As in, for example, is an enterprise not a fit anymore because they need those custom solutions and they need to be at least partially a fintech to fall within some regulations? As in, does the ideal customer persona sort of weed out at some point?
I mean, it's a very good question, very fair question, and I think this is also like something very important to mention here is that with our solution, it's not so much like custom. I mean, obviously our customers develop completely their front end. What we provide is the API at the moment to issue debit cards, to create IBAN bank accounts, and leave the hassle of compliance regulatory on our side and only integrate these features. The customer still has full control over the front end, can still design in the way they want to do certain things. On top of it, I mean, as mentioned before, we are working with different banking providers in the background. If there's, for example, in your example, if there's a major enterprise, maybe it's even a big company that is already engaging or working together with one bank in a very specific way, and ideally they want to offer or launch a new banking product together with this bank. Actually, our solution, we call it Weavr Meta, is enabling this enterprise to connect this bank into our technology, and then basically using the Weavr technology, but based on this very specific bank. So it's kind of like bring your own bank to the Weavr stack. You don't have to use an existing one if you want to. Obviously, the fastest and most convenient solution would be to use an existing banking partner, but there's also possibilities to bring your own banking partner.
Okay, so of course I could ask you the most boring and tired question of every interview or interaction like this. So how was COVID? I don't want to ask you that. I know that, of course, everybody was on digital transformation. You guys probably had a massive success. Stop me if I'm wrong at any point, but essentially it was the driver that probably got you more demand, more inquiries, and more customers.
Definitely, yeah. Definitely. I mean, for us, how was COVID? I mean, to be honest, I joined the company during COVID, right? I mean, I joined the company in October last year, where basically COVID was already like around for half a year. When COVID started, the team was maybe, I don't know, 5 to 10 people, something like this. So obviously there's not much of a company history before COVID. So obviously we have scaled the company now quite a bit in the last 12 months. Obviously we are remote first. We have a team completely spread out over the European continent. Yeah, obviously COVID has also accelerated the digital transformation from some of the customers or the companies we're talking to. So obviously it had certain benefits for us as well in these very, very, very special and weird times.
Okay, so that was what happened. What about right now? COVID is sort of evening out. Digital transformation for sure here to stay. The push and the massive acceleration, we're going to feel it for the years to come. It's not going to finish with full vaccination of the entire world. So what do you expect in January 2022 to December 2022?
Sure. I mean, also we've chosen the title here, why embedded banking needs to leave the fintech bubble. I think what we can overall say, and I think that's currently where we are in, we have been talking since 2020, since last year. A lot of talks have been around embedded banking, embedded finance, which is more or less like all the same thing. I think we are still in a very, very early phase in this. And like what we are seeing right now on the last couple of months is that first industries are picking up what the potential of embedded banking contains and kind of wants to explore it. So for us at the moment is already the last couple of months, but probably next couple of months, next year is major growth in very different areas. So obviously a typical startup life, this is what's happening at the moment for us, that we are growing the different teams, building more suitable products for certain industries to fit the demand that we are seeing.
So you sound awfully confident and secure, and nothing will happen to the industry and space.
I mean, obviously, I think for anybody who has worked in a high growth startup or in general in the startup landscape, I think one thing that everybody knows very well, that momentum is a very, very important thing, and it's very, very important not to lose that. So yeah, it might sound, or it might be the case that right now, obviously, we are on a good track. We're developing our products. We are seeing more demand, more growth in all areas. But obviously, that nothing is. Nothing is set in stone, right? Obviously, all these things can change. On our side, things can change. In the industry, things can change. So obviously, right now we are riding a wave. The topic is in all ears, everywhere. So obviously, it's a big benefit for us. But of course, we have to be very careful as well that these things can change like very, very quickly. I think there are multiple examples in fintech and banking or the technology space in general that things can also change like quite rapidly. And sometimes or very often they're completely out of your control. One major event at a big tech company, kind of, I don't know, drying out funding and these kind of things. All of these things can happen. So obviously, we have to be very, very, honest about that.
So also what I'm thinking is, after what you mentioned about not needing a better bank, for how long will we even need a bank, right? Because at some point, at least the trend that I'm seeing personally and following the logic of this conversation that we're having here is there are more and more instances in the user journey of life, whatever it is, from waking up to falling asleep, where I am receiving a solution by not exactly interacting with the banking provider, right? It's somewhere happening behind the scenes. So if we were to extrapolate that trend, we would be looking at a situation where banking is white labeled. I don't care if I'm banking with Barclays, if I'm banking with Santander, if I'm banking with whoever. Do you think that's a future that's inevitably coming? Do we need banks? I mean, banks as we know today, like a brand, like a thing that spends money on marketing. Do we?
I mean, this is a very, very important comment, right? Like banks as we know them today or maybe in the past. I think one thing is very, very clear over the last years and maybe the last decade. If we're looking like 10, 20 years ago, a bank has traditionally done everything in the value chain, right? Like from the bank branch, doing the consultation from every single banking product, including mortgages, maybe even including insurances, investment products, and so on. And then to the back office, to the compliance team, anti-money laundering, everything was done by the bank. And that was obviously one of the reasons a bank was doing all of that was obviously because of entry barriers. They basically were protected by either by regulation, but also by technology and other things. They were actually able to do all of that. And when banks were traditionally competing, they were traditionally competing with other banks who were very much in the same position. So the whole market was kind of like stable, right? And now what happens with fintech in the last like 6, 7, 8 years is that we've seen like so many new entrants coming in. I mean, all of us know probably this very famous Wells Fargo screenshot of like death by 1,000 cuts, seeing like the 1,000 startups that are attacking the different Wells Fargo services, right? But that's basically what's happening now. And the result is now that banks, and when I say banks, I mean, it really depends what kind of bank you are, what is really USP. You have to figure out like where do you want to compete and where you want to go after, right? There might be some banks who might be very technology aware, and there might be very much even trying to find maybe their space in the embedded banking space, but there might be other banks who want to go into other areas. So I would completely agree that And I think I can make the statement very easily if I don't put a timeline to it. I think one of the most complicated things in these kind of things is to say it happened in 3 years, 5 years, or 10 years. But if I would remove the timeline from the statement, I think it's very, very obvious and very, very clear to me that in the future, our children, the next generation, will bank with brands that they like and enjoy, and not with traditional banks. These traditional banks might be in some form or another still power these brands. They might go in the background. And the background doesn't necessarily mean something super negative. It can be a very strong position for them as well if they're capable of supporting the new up and coming brands with banking solutions, which could be even very attractive for the banking partner, right? Because obviously, if a new brand is coming up, if a new service provider is coming up, it's hot and coming, you don't have to compete with them. You can just empower them and work with them. So obviously, I mean, this is how we, or how I see the market developing. I think, as I said, the really complicated piece is like, is this new feature going to be in place in 3 years, 5 years, 10 years, 15 years? That's a question I'm not going to answer.
Okay, I mean, let's say we could throw out a prediction. I'd say yes, because one thing is that it's a tool for competing, but another thing is that, you know, for example, I don't want to make a mistake, so I'll just digital front. I wanted to use this example that, for example, when I have Revolut and you have the opportunity to buy stocks, to buy crypto, to invest, essentially, I don't really care who is the supplier of the thing behind the scenes that allows us, because we know it's not Revolut. But as long as Revolut tells me, I got your back in case anything happens, and this is the easiest way for you to go tap, 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 you've invested. Like,
exactly.
You know, of course, right now, buy now, pay later companies are known because they're a relative novelty, even though some people call it a dressed up credit card. But the point is that eventually you won't really be interested who is allowing you to pay later. If you're at McDonald's and there's a pay us later, like, is it this provider, that provider? I don't care. I just want my burger. Whatever allows me to proceed faster is just better. Don't make me think. I don't want to think. I want to give you my money and eat my burger.
Exactly. And the Revolut example is also, of course, very, very good in a way that, like, whoever has the access to the customer, who understands the customer, who has the brand and everything around, who can serve the customer, can be very powerful. And at the end of it, I mean, I think there's a statement, maybe it's not so comparable, but I think I read a statement a few weeks ago from a Stripe employee, like a high-ranked employee, shared on Twitter. I think one of the things he's like the most proudest about in the company is that the company is not fighting to be number one in every area. There might be very well number one in some areas, but at the end of it, I think what's really powerful around Stripe is obviously that they're focusing on one very specific customer market, very, very specific target group. And obviously, they launched now in the last couple of months lots of new services, from, I don't know, what was it, like carbon footprint to taxes to identification and all these kind of things. And obviously, these services might not always like best in class against everything, but somebody who is in the Stripe ecosystem, who are using a Stripe product, is obviously very, 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 very close to use these additional things. And the same for Revolut, right? If you have already your current account with Revolut, you maybe started using the crypto trading a few months ago. Obviously, everything else that Revolut now launches in the future is obviously very, very compelling for you, because you are in this ecosystem, you're a happy user, and it might just a lot easier to acquire a new customer. And that's the same analogy for a company who is outside of banking, who is outside of fintech, right? A technology company, a SaaS provider, who is maybe locked in the customer with certain products in a positive way, creating so much value that the customer doesn't want to move. So obviously, bring a bank to this customer in the same context can be extremely powerful for both sides.
And I think this is a good phrase for calling what you just described, is owning the rails, which has been true since it was referring to actual trains and owning the rail. Just to right now, like, you know, I own the rails if I'm Facebook. I own the rails if I am Stripe. I own the rails if I am any platform, any marketplace, anything that really is a corridor through which people have to go through. And I'm the bouncer at the door. If I let you in,
exactly.
You know, I'll need some money. So your key areas of focus, Weavr.io, does it have like,
yeah, sure. I mean, as now said probably like multiple times, and the audience might be getting bored of that. We are focusing on non-fintech. So I think, as mentioned before, it's still a transition. So if you look maybe at all our customers, there might be still some customers who are more like in the fintech side, but we are focusing and seeing clear demand from various areas. We are not, our solution doesn't work only in one area, but there are a couple of areas that we have identified in the last couple of months as extremely relevant. And those are real estate, education, healthcare, and future of work. I mean, those areas, we looked at a bunch of different industries, verticals, have taken like different criteria in mind. Obviously, something like market size, the development in the market obviously is very, very important. So growth of the market itself, but also how many new companies are entering the space, how much attention this space gets maybe from VCs and additional funding, because obviously our customers are typically digital disruptor, digital companies. So all these things were of course relevant for us. On top of it, of course, we were operating since October last year. So while looking at the different industry over these years, we already could take in consideration multiple conversations we had with different thought leaders, but potential customer from these spaces to understand what makes a lot of sense. And those are at the moment the 4 areas we highlight on our homepage. But yeah, if somebody's coming from a completely different area, that's of course also something we want to serve. But we as thought leaders and at education different spaces are currently focusing our efforts on those 4 areas.
Because of course you never want to be the startup that says, "Oh, we don't have a customer persona; we can work with everybody," right? Of course, you never should apologize for versatility, but the focus needs to be there for the product, for the business, for everybody, yes. Really. So it makes sense.
And also, I mean, one thing is here very, very important to keep in mind. I mean, again, we are like what Weavr is doing, what embedded banking, embedded finance is different than banking as a service, right? So of course we can learn and maybe look at what banking as a service has been done, but let's take the real estate industry. Now let's focus on use cases, financial use cases in the real estate industry, right? There might be some very, very different requirements for certain features, for certain functionalities. Maybe some functionality was for traditional banking as a service, or for other industries not so relevant, but there might be very specific functionality that's really, really important for the real estate industry. Maybe it's like push amounts to a debit card and make it available on an existing debit card, not to issue a new debit card, but something like MasterCard Send. These kind of things could be, for example, very, very relevant, right? So for us, we also need to learn and understand what do we need to break into certain industries. And obviously, it's a competitive space as well. So of course, we want to win with certain industry, gaining certain traction in certain industries, and then go move on to other industries. I think one thing which has been clear, like we're in the past, is like if you try to address everybody and all of them at the same time, it's really, really complicated. But obviously, if you can focus on a specific area, learn with them, be successful in that area, then it gets a lot easier as well to get out of this area and focus on other spaces as well.
My brain is sort of racing with ideas of how this setup that you're proposing can actually be helpful or useful or practical, because it's pretty much I've seen this video, I think it was on TikTok. Apologies for being on TikTok, but essentially the idea was that the teacher came to a very large classroom and they were trying to find out who is cheating. And they just had to turn off the light, and immediately you would see everybody whose phone was reflecting the line on the face. And my point here is that similarly in that way, when you turn off the light, you can easily see the problems. And with landlords and with real estate, well, there's also the person who is paying the money to the landlord. And one thing that I think is universal of geography of any type of real estate that is being rented is the deposit, which many a times is the case of disputes, or, you know, can I trust you with the deposit? And here, if any solution that's supposed to speak between landlord and person that's renting the apartment, if all of a sudden you tell me the money is safe in escrow, right, for the duration of this, and you don't have to worry that the landlord will take it because they have the money in hand, that's already, like, you know, a super simple, super fast, but solution of an actual problem that's, you know, of course, takes care of trust. I think in this case, that's the value here.
And what I also like, I mean, another comment I also like about the solution you proposed is basically Obviously, traditionally, these companies, I mean, I'm not an expert in the industry, but traditionally, these companies have only or exclusively or very strongly focused on the landlords, right? But obviously, all these platforms would have a huge benefit if they somehow can involve the tenant as well in the process, because obviously, there might be very low or no stickiness at all with the tenant, right? The tenant might choose a certain platform maybe to find a certain landlord at one point, but the next time they're going out, they're completely indifferent to what platform they use, right? They're going to probably start at all of them again and find it somewhere. But obviously, if there's already some kind of services, login effect, benefits that you can provide to your tenant to at least take you as a first platform to look for and kind of a preferred solution, this could obviously be something very, very interesting. And very often, banking products, financial products, I mean, all of us know that are sticky, right? I mean, this is one of the main benefits of embedded banking as well. If you already have a certain financial product, I mean, you can always change. There's no like impossibility to change a financial product, but it just has certain stickiness. So obviously, if you have a tenant already who's using maybe a bank account, who's using already certain features, maybe making certain payments through it, maybe connecting through open banking to other bank accounts, these kind of things. Obviously, you can try to create certain stickiness to keep the tenant in the loop as well.
Yeah, I mean, it could be even stupid sticky, so to say, because let's say you're not new on the platform, you already rented a place via us across 3 other tenants. So tenant number 4 should be able to hear that the banking of XYZ landlord bank ABC can tell you, hey, listen, this is a trusted payer. And on the other hand, this is sort of what buy now pay later does, because if you're a large company or a large fund, you can get a credit line, you can get some extra liquidity. But if you're a person and you're just 1 week before your salary, there's not many cash flow solutions for you. But here in that case, for example, if that banking solution was able to spot me, to cover me for just that week, because I have everything else to pay, because I've been paying for the last 24 months without a delay, without a single missed payment. So just opportunities on opportunities on opportunities to making sure, because where else will you go if you remember that this banking solution just lets you not worry about this and say, cool, we got you. So
yeah, in a way, maybe, I mean, this is also, I mean, maybe it's not 100% applicable in this use case, but obviously, I think what was happening with embedded banking, embedded finance, also that people think less of this as banking or finance or this kind of compared to traditional solutions, right? I mean, one thing when I talk to my friends who are maybe in the technology space or maybe sometimes even in fintech, but not so much on the embedded banking, embedded fintech hype, they often comment on like, okay, but how many debit cards, bank accounts do I really need? I already have like 3 bank accounts. Why should I get like 3 more bank accounts with other providers, right? But I think what is a really benefit of embedded banking, embedded finance is that we are enabling companies to offer these products. And actually the product itself, the financial product itself might even move a little bit in the background. And it's more about the value and the benefits you're getting out of it. So you might use these products like very, very differently than you use a traditional banking product, let's say from Deutsche Bank or HSBC. And that's what I find particularly interesting.
So the next question I wanted to ask is, why do you believe embedded banking needs to get out of the fintech bubble? And we're already sort of discussing this and in a slightly philosophical manner, which I'm enjoying a lot.
Yeah.
Because essentially, it's not even the matter of you're not buying a nail, you're not buying a hole in the wall, you're buying a hanging picture in terms of what is the value that you're buying as a customer or selling as the company. But it's even just about the practical trust and cutting you some slack, because essentially, if this was not a individual to company interaction but a human to human, essentially what you're saying by let me cover this last week of the rent in a week, not now, or don't get my deposit so high because I'm a trusted person. This is essentially what you would have if you were trying to rent out the apartment to me and you would say deposit is this high, and I would say cut me some slack. Like, I've been renting it out from 3 people and I'm good for this. I'm good for this. And likewise, I will pay you back in a week. So it's even more about just that feeling of comfort. I really don't like saying that, the technology will be like your friend and so on and so on and so on, right? But essentially, it's even more than just the value of we got you your payment faster. We made your life that much less stressful and that much less focusing about, like, I believe at the core of it, human beings are not made to be people who sit at numbers figuring it out and not going on about their life, but trying to work around admin and bureaucracy of a payment of the place where they live. So just reducing all of that and making sure that there's trust and minimize risk for the company. Boom.
Exactly. And we have seen that in the past. I mean, me personally, but of course also other people have seen in the past quite a lot that we interacted with a lot of companies that wanted to embark on the journey of offering financial products. I mean, you mentioned maybe Weavr already, which is of course slightly different example, but even here in Europe, in Germany, we have seen certain companies at a very early stage, and they were struggling with launching the products because it's really, really complicated to figure out I mean, it's not just you have to find the right partners, right? You also have to create the value proposition. You have to actually build a product, all these kind of things, manage it and launch it. And these are typically very, very heavy investments required. But now, of course, with solutions like ours, teams can launch in a very, very inexpensive way MVPs, maybe even do internal solutions, try testing certain things, figuring certain things out, and then launch them maybe to a specific market, specific area. And since the cost is so much lower than maybe traditional banking as a service, you can also launch products that might be just focusing on a specific segment of customers, not the whole customers, but a very, very specific segment of customers, and try it out and learn with it and then grow from there. And I think overall, I mean, you phrased the question or the title, obviously, embedded banking should leave the bubble. I mean, obviously, and I think this is also my background in open banking. There's always this question like, how many people do know about open banking? And in the future, people are going to ask, how many people know about embedded banking? But it doesn't really matter in that way. Like if you know about like what the term means at the end of it, it really depends on the services that are out there that you can use. And again, we are still talking, I mean, most of the discussion around these kind of things are still happening more in the fintech bubble, but we have seen in the last couple of months, it's especially in the four industry that I mentioned, where it's going out, where companies exploring the opportunities and building stuff. But now it's really about the next couple of months to kind of bring that to a higher level, to more use cases, more areas of embedded banking. And that's basically what we are pushing, what we're aiming for. But obviously, it's still a long journey.
And speaking of the industry, because it makes it sound all rosy and fantastic, what can go wrong with open banking? What can go wrong with embedded banking? What can go wrong with any trend, really? For example, of course, it's not to say that buy now, pay later is a bad trend in itself, because like I said, rightfully so, mentioned that this is a redesign of something that we have already done, so access money in advance of when you have it. And of course, people are bringing into question, how do you make sure that those people will bring you money? Do you actually have the liquidity on site in the company, or are you relying on other companies? But, you know, buy now, pay later is like the easiest example. I'm looking for other trends that you're seeing that are promising, and if managed correctly, they will bring fantastic efficiency increases and productivity increases. But if something wrong happens, and I'm curious to hear what could happen.
I mean, honestly, I mean, of course, I've spoken about company, about our vision, what we're doing, and of course, as typically, if you're working in a startup, you have to make it big and rosy and shiny, right? But I mean, at the end of it, we are still a startup, right? So obviously, there are so many things that can theoretically go wrong, and most of them, of course, are happening also outside of us. So I think one of the, I mean, personally, it might be a little bit boring, but personally, I think not the biggest challenge, but obviously what could be bad for us, for the industry, is obviously if this whole embedded fintech, embedded banking, embedded finance is taking 5 to 10 years longer than what we originally thought would have taken, right? I mean, obviously, you know it as well. We all are like venture funded from investors. Obviously, if this is now taking like 5 years longer, then obviously this might cause a lot of problems for a lot of players in the market. So obviously, that's one major concern. I think operating in fintech, in banking, you always have regulation at one point. You always have compliance. You always have customer perception about certain things. So obviously, one company doing something, a big brand maybe launching a bank product and doing it inherently wrong and maybe exploit customer data or all the other kind of things, obviously that can have a big impact on the development of embedded banking, embedded finance as well. Overall, I'm not too, let's say, pessimistic about that. I mean, I think everybody's not realized that I'm quite optimistic about the space and what's going on. But I think we have to be like very, very careful as well that there are so many things happening outside of our scope that we cannot control. And at the end of it, we have to observe them and have to see if our decisions that we are making are still in line with what we're seeing outside. And I mean, you mentioned now buy now, pay later. Another one is maybe DeFi, which is getting a lot of attention and attraction and talks around that. So obviously we're looking at these trends as well to observe them. I think for us as a company, our USP, our focus is really the translation, the transition between financial service industries and non-financial service industry. So we are the translator, the company that our customers can launch these products. So obviously, even a buy now, pay later, even a DeFi, even other products at one point might be even added to our offering. As mentioned, we are anyway working together with different banking partners, so that might be something we'll be looking at the future as well. But yeah, at the moment, it's still focusing on the core products, as we mentioned.
I mean, I think that it's often forgotten that we have had the stock market for, I think, around 200 years. I hope I'm not messing up that number, but I think it was the 19th century. And that was like the first attempt at any financial engineering, investment vehicles, and so on. So we fail to realize as a species sometimes, I think, how fast we are proceeding in terms of cultural evolution, and we rarely have the occasion to step back and zoom out and see this from a meta perspective. And just like there are people who have invested a lot in crypto and sold at the bad time, or they got robbed at the incorrect exchange, or even the correct exchange, which was supposed to be safe, but wasn't at the time when it needed to be, there will be a lot of victims of progress, if I might call it that with major change and overhauling the concept of money from a piece of paper, or your final will from a piece of paper to a smart contract, there will simply be situations where the system will stumble, and the user, the company, the investor, someone who placed a bet on something new will simply not enjoy the benefits, but rather be an example of how things might have gotten wrong. But overall, as a cost to this evolution and how much value is being unlocked, I think that's it's difficult to evaluate or compare, because we don't know where we would be without decentralized finance. We don't know where we would be without crypto. Perhaps we would be going through a 20 times worse crisis right now. So of course it's easy to point fingers and say this is bad, this is good, but we can't really A/B test reality, can we?
No, completely agree with that. I think in a way, I mean, obviously we are a technology first company, but as you mentioned as well, there might be in the overall landscape of developing certain trends and certain trends, there might be certain hiccups in there. I think especially working in financial service industry, especially working with money, especially being a provider or a service provider who relies a lot on trust, there's obviously a lot you can lose if you do something wrong, right? So we are of course technology first, but we are equally compliance first as well. I think one of the biggest, not weapons, but the biggest asset we have is building up trust with the customer. And obviously, if you lose that, it might go like very, very wrong. But obviously, that's something we have to focus on. But yeah, it doesn't mean it's the only item. Obviously, some other things can also go wrong.
And I wanted to ask you some questions that are not necessarily on the technical or fintech or anything really concerning the startup world front, but rather you as a person, as a executive, as a business executive, and as a human being. So got two questions of those. Decision-making framework. Any tips you can share with other leaders how to improve decision-making? And we're thinking about a rule of thumb. It can be as specific as you want, as broad as you want. As an example, cake is good. Sure. Is it good for me? Sometimes. Is it good for me in the amounts I would like to eat it? No. So that's a quick decision-making framework. So I'm curious, what's yours about something more important than cake?
Of course, it's a big question. I mean, let me think about what angle is most relevant, most interesting. I think, I don't know, when I think about like decision-making processes, and especially now the last couple of years working, especially as a freelancer with different startups, I think one thing that I've seen, maybe especially in the early stages, very often not going so well, is that obviously for me, when I look at the decision-making process, there are, and I think it's widely agreed, is the different phases that you basically have. I mean, maybe very easily, like you collect data, you evaluate the option, and you make a decision, right? What I've seen often, what can happen in a fast-paced concept very, very quickly is that teams or people jump in between these different areas. They maybe collect certain kind of data and they're evaluating. They want to make a decision, but then they quickly realize, oh, something was forgotten. They add it to the mix, but just add maybe that one piece of information, but don't think in a broader perspective. So I think what I've seen is really making distinctive separation between the different areas and kind of agree as a team, okay, now we have finished the gathering space and we've kind of collected all the data, we have all the necessary input, and now we can evaluate. I think that's really, really important and powerful at the end of it. And maybe a second comment, I'm just thinking about that. I think one thing obviously as well, but as I mentioned, like fast-paced environment and early stage startups. I think I read a tweet also the other day basically which said, and I kind of resonate a lot with me, is if the decision is reversible, then make it fast. If it irreversible, then maybe definitely spend a little bit more time of looking in the different outcomes and evaluating. So I'm guessing the evaluation phase is really depending on if the decision is reversible or not. I think those would be my takes, but maybe not sure if it's the smartest thing I can share here as well.
Well, like I said, there's no right or wrong answer as long as it's yours. And this principle applies to this question as well. I'm giving you a magic wand, of course, remotely, and you get to abracadabra so that every 12-year-old in the world all of a sudden is blessed with knowledge on what? We have heard emotional intelligence, design thinking, financial savviness. We have heard from one of our guests, nothing. Leave the kids alone. Let them be 12-year-olds. And there's no right or wrong answer. You could repeat what was mentioned. Just make sure that I hear and the audience hears why.
Yeah, there are probably a lot of things. I mean, I picked now one that you actually mentioned. I mean, we're talking here about banking, fintech. So I think financial education is extremely, extremely important. I would say it's extremely important. I mean, 12-year-old might be a little bit too young to get all the knowledge around financial education. On the other hand, a very valid question is like, when do we teach children or teenagers or young adults about financial education? I think it has never been done in a really good way, and I mean, in our maybe Western world. And on top of it, I think it will become, or definitely will become, a lot more important for the next coming generation. I think maybe our parents or the generation, maybe even around us, can still rely on some kind of safety net, some kind of pension schemes. I mean, more or less in a way, obviously. But I think this will reduce in the next generation. So obviously, being aware of making the right decision around financial decision is really, really important. And I think if any 12-year-old knows, maybe with the magic wand now, that they have to kind of look into this and do certain actions. I mean, I think overall financial education, financial investments, these kind of things, is not rocket science, obviously, right? I mean, like, start early, diversify, do it continuously, never stop, basically, like ongoing investments, these kind of things. If every 12-year-old would implement that by the time they start their first job, these kind of things, I'm guessing all of them will be hopefully a little bit better off when they get in the older age and have to rely on these things.
When I was listening to you, I actually realized that it's not the kids at whom we should be waving the magic wand in this case. I think hear me out and tell me what you think, because, of course, how do kids learn what they learn when they're 12? Well, there's a curriculum at school, or there's a decision from the parents. Basically, adults are in the position to be responsible for this. And why don't we have the natural propensity to simply make sure that you're 12? Do you know how taxes work? Do you understand VAT? Do you understand the concept of why taxes exist, what they're supposed to do? Not to make sure that you can, at the age of 12, propose some tax evasion scheme, how to figure out to push your money to the Cayman Islands. That's not the point. It's more about having a healthy relationship with money, I think. It's more about the fact that if you're a kid and if you're asking your parents about something concerning money, you don't get a response of, it's none of your business, or people shouldn't know how much we earn because they will come to us and rob us, and you will for sure tell someone. That it's not a taboo or anything. This is none of your concern. This is none of your concern until it becomes your concern, until you're 18 and you're being asked to be concerned with money. But hey, no one really explained all of those things to you, because money was displayed to you as this topic that you shouldn't ask your teammates what is their salary, and all of those societal constraints. Those are the limiting factors, because it's not the fact that we don't have teachers who could spend 45 minutes a week just making sure that the kids understand the taxes.
Of course, of course. I mean, I would probably even like focus a lot more on like financial education around like investments and preparing for maybe the old age in the way of like having sufficient funds to keep the same lifestyle. And I think that's of course extremely complicated to do so, because obviously you can do a class and do some sessions around these kind of things, but you know it as well, if you teach like a teenager something like this in a theoretical class, it might not stick that well, right? So obviously it would be interesting to see if there's certain kind of concept of like using maybe technology, maybe using certain kind of apps, using certain kind of systems to show the benefits, obviously, because right now obviously it's really hard to teach somebody, oh yeah, you should put maybe 50 or 100 euros aside every month and put it in this boring ETF, and you have to do it for like 20, 30 years because it's really important. Obviously, it's a very easy choice to make when you start your job. Oh, I'm not doing it right now. I'm doing it next year. I'm doing it next year. I'm doing it the next year. And then at the end, it's just like 5 or 8 years later. But actually, if you would see the impact of like starting 5 to 8 years later with these kind of things, that's like really, really eye-opening, right? And this is, I feel like if you, I see it very often that when people start with doing these kind of things, when they start investing, when they do certain things, I'm not talking about crypto or any kind of like crazy investment, but really like the standard stuff, when they start and they see the benefits, that's maybe hooked is the wrong word, but they get it. And then they are like completely detached and involved in it. I think it's really, really hard to teach in a theoretical class, but a lot easier if you can actually show how it works and what the impact is.
Well, of course, it's evident that after this show, we will have another call and we will set up our own school for 12-year-olds, teaching them the basics
Oh boy.
of financial management. But jokes aside, of course, 12-year-olds shouldn't be learning about ETFs, but what they should be learning about is the principle of what is equity. And the easiest way right now, I'm figuring this out, is run a competition. All brokerage, all online brokerages, they propose for you to have a test account where the money is an actual money. So if you make sure that, of course, regulatory, so 12-year-olds don't go on a platform that's supposed to be only accessed by adults, but whatever the solution is, and you ran a competition for the semester, you give them 5 companies to choose from. Everybody from the class gets to learn that this company does that, this company does that. Think for yourself, is that, you know, if it does sweets, okay, but if it does fuel, okay, if it does electronics. And just run a simple competition and not make it about money, but whoever made those choices, and they will then learn that some of the kids in class were just lucky. Some of the kids made the best research and were super unlucky and lost all of their fake money. So I think if I had a class like that when I was 12, I would be not just understanding, I would be engaged. I would want to do this again.
Exactly. And fun fact, that's how Trade Republic started. Before they embark on that journey, they did some kind of activities like this around as well. So maybe it even ends up building $1 billion company.
Can you say more? I'm curious.
So, I mean, obviously, I don't know all the details, but obviously the team of Trade Republic has been going after different ideas, different things. Everything was around investment, and I think, of course, one part was, a game for university students around display money and to do like a kind of a competition, who can invest, who can win this kind of competition, and that was, I think, one of the projects they had before embarking on the low cost trading solution.
I'll have to look into that. I'm super curious.
For sure.
All right, Lars. I'm wondering if you have any closing remarks, if you are, for example, hiring and you want to say that, so any listening developer goes to your careers page, because we're at the 55th
it's not. No, I mean, sorry to interrupt you. I mean, yeah,
no,
it was really.
I was saying that we are on the 55th minute, so we are, sort of closing off. So the time for our thank yous and announcements, if there are any.
No, it was really great to be here. Thanks, Philip. Thanks, NetGuru, for hosting me. I think I was part of the disruption talks in Berlin a couple of years ago already. Now here on the virtual one, so very happy to be here again. I hope the listeners could, maybe have a few thoughts around their areas, what's happening, how maybe banking, fintech can connect to their areas. Obviously, we are hiring, but I think what I'm also very interested in, if there's anybody having certain kind of ideas or thoughts or disagrees with me, I think Twitter, LinkedIn, email, whatever it is, feel free to reach out. Always happy to have a chat and engage with folks like this. Closing remarks. I hope there was some value for for some of the listeners over here. I hope I didn't repeat too often that we are doing embedded banking and focusing on non-fintech companies. But yeah, I think one thing is I'm not saying these things because of what I work for Weavr. I work for Weavr because I believe in these things. Basically, the decision to join Weavr was because I've seen this trend picking up and want to have some skin in the game. So that's what I think is explanation for that.
And that's a solid closing remark. So, Lars, thank you. It was all our pleasure. And, I'm not saying that there's a direct correlation, but we've seen this happen more than enough to say that it's not an accident. The more frequently founders and executives attend disruption forums and disruption talks, we have seen this pattern of money being raised, of acquisitions, huge successes. So it's good that you were with us in 2018 in Berlin. It's great that you are here today with us on Talks, and fingers crossed really soon for Decacorn valuation. It's in the stars for you, I'm sure.
Let's see. Thanks for having me, Philip.
Thank you. See you, everybody, and see you next week on Disruption Talks.